I believe people will turn back to gold for safety. There's a lot of gold being brought into central banking system. And then silver, of course, is a bit more speculative asset, which may be a little bit less monetary than it used to be, and probably quite a bit more industrial. So it's got that. Hey everyone, the story today is going to be about the UK and whether or not what's going on in the UK from an economic crisis perspective and even from a political perspective may be coming to another country near you, especially the United States. I recently wrote an article for posting on Jan Bullion's blog about this, but I wanted to do a video as well for those of you following along Jan Bullion's YouTube channel. I think it's very important because a lot of what's going on in the UK is really symbolic of what's going on around the world, and sort of looking at that process and examining it as a way for us to figure out as individuals whether this is something that we think is coming to a country near us, an economic theater near us, and if so, what would be the most appropriate way to sort of deal with that, not only from a fiscal perspective on how we're handling our own finances, but in addition, what is the dialogue around this process? Because we definitely are going to have world leaders doing certain things, but we need a public discourse and dialogue as this goes along so we can give feedback to those leaders about what's most important to us and make sure that they're keeping those in mind. You know, economic downturns are part of the business cycle. They happen usually every 4 to 12 years. And in the United States, we've had the longest single period of economic prosperity we've had in a very long time, since the Great Recession ended about the 2009 timeframe. You could say we've had the best 12 years we've ever had. Well, not the best 12 years we've ever had. Let me amend that by saying we've had some of the biggest gains in some of the stock markets and certain asset classes like real estate that we've ever had, but the underlying economic issues haven't gotten better. And it seems to be that natural economic law is sort of forcing its will on the leaders of the world and the policies that, you know, to be fair, a lot of us voted for, or at least a lot of us voted them into office to do for us. So no one here really will escape blame, and we're not really here to point the finger, more just examine the process. So we're going to go ahead and get into a screen share. I'm going to walk you through, you know, some of the things I'm thinking and some of the things that I covered in the article. So here on CNN Business, a recent article yesterday came out about what's going on as the new prime minister tries to fix the economic crisis. For those of you who may not have been following the UK, Truss, who is the new UK PM, picked by the party, not by consensus. She wasn't favored by party lawmakers. She was more favored by the members. And this gentleman here was more favored by the party lawmakers. So there was a split. She was in 44, 45 days, the shortest term UK prime minister on record, because there were some more fiscal government policies enacted, basically trying to address the given economic issues, and it didn't solve the problem. She got ousted really quick, and this guy was put in her place. And we're going to examine that a little bit in terms of economically what it means. Here, according to CNN Business, the UK government has delayed its budget by more than 2 weeks, buying new Prime Minister Rishi Sunak some time to make difficult choices about how to tackle the country's profound economic crisis. Finance Minister Jeremy Hunt will now deliver the government's medium-term fiscal plan on November 17th, according to a statement from the Treasury. It has been scheduled for October 31st, after the date was previously pulled forward by more than 2 weeks in a desperate attempt to reassure investors by huge unfunded tax cuts promised by former Prime Minister Liz Truss. Liz Truss is the one that was in office the shortest time ever. I think it was 44 or 45 days. Sunak, Britain's third prime minister in 7 weeks, took office on Tuesday with a pledge to fix the mistakes Truss made. So before Truss, you had, I believe it was Boris Johnson, who didn't last very long, and then Truss, and now him. And he has more of a Goldman Sachs background, a banking background, hedge fund. So they're looking for someone who has a little bit more business experience in this role. Whether or not he'd be effective, we'll have to see. And the article goes on to talk about that. One thing I wanted to point out, that Britain is at the 100% debt to GDP club. And what that means typically is once you get past 90%, according to researchers who published some work at Harvard, among other places, was once you get to 90% debt to GDP in a given year, that indicates you're having more severe economic problems. You're going to face higher inflation, and you're going to face restructuring, and how that restructuring gets gets accomplished is dependent upon many things. Not only what's going on with the individual country having to do it, but how the rest of the world reacts to that, central bank policies, things like that. Because after all, we're in a globalized world, and it does, one country's policies do affect the other. And I wanted to point out this chart. It was in an article I had recently posted on October 11th on JM Bullion's website, talking about the precious metals. And one of the things that I looked at was this chart right here. Let me blow it up just a little bit for you guys. And this chart, Reinhardt and Rogoff published a report back in 2010, 2011. Sorry, I just accidentally clicked that, in which it talked about at what point do countries get in trouble with their fiscal and economic policies, and do they then, I'm sorry, I have issues with the website. Let me see if I can get it. Here we go. Okay. So, and at what point do those policies require a stricter restructuring of the environment, and at what point do those policies cause inflation to sort of run out of control? And as you can see here on the chart, very busy chart, but what you want to pay attention is the blue line. Once that blue line gets to 80–90% range, the percentage of countries with annual inflation over 20% rises. These are the dark bars. And then the total public debt rises, and that's the solid line on the right axis. And you can see the percent of countries restructuring. So as this number gets higher, the percentage of companies that have to restructure gets higher. Very, very simple eye chart there. And that seems to agree with what's going on in the world. Many big countries like central bank regions like Europe and economic regions like Europe are suffering higher than 90% debt to GDP. Certainly Japan is probably the highest of all of them, and every single one of them is having major financial issues. And it seems to go along and coincide with what Reinhardt and Rogoff had found in their backward-looking research. So in other words, what they saw previous to the this current crisis, which included 2008, 2009 financial crisis, seems to be playing out even on a broader, more global scale for the rest of the world. So it's still good research. Wanted to point out an article from the Wall Street Journal. The UN has gotten concerned, and so they've called on the Fed and other central banks to halt interest rate increases. They think that it's basically crashing the economy. And one of the quotes they have down here, it says, the Federal Reserve and other central banks risk pushing the global economy into a recession, followed by prolonged stagnation if they keep raising interest rates, the United Nations agency said Monday. So now groups like the UN are starting to get involved, because what happens economically has a political component. Essentially, politics is, in its simplest form, the allocation of resources within society. And so politics and the economy go together. That's why we have courses on political economy. We have political economists, because you understand the relationship between those two. Okay, so what is one of the reactions the world is having, that individual nations are having to what's going on? Well, it's deglobalization. So here at Chatham House, there's a really nice quote that explains really sort of what is going on here, which I'm going to read it, and it's going to be right here. It says, increasingly, policymakers struggle to articulate an appropriate balance between global and local solutions. How much should international trade in goods and services be curbed or facilitated? How can the global climate change challenge be met by competing, sometimes hostile nations? And I would add to that, how many nations agree about how bad and what causes global climate change? That's another good question. They go on to say, how is migration to be managed and its push factors adequately addressed? How are wars and conflict to be managed? To what extent should responses to health emergencies be dealt with by international organizations? Down to this paragraph. The effect on political imagination inevitably has a knock-on effect on the trade and financial flows that underpin global trade, weakening confidence in the safety of international investments. I write that because they agree with me that the political and the economic are together, and the political decisions made will affect and be affected by the economic ones, and they need to be aligned. And that is an issue that we're having right now. Deglobalization is one of those things in which it's a reaction to some of the issues that are going on with trade, sanctions, economic issues, the flow of goods and the flow of money. But is deglobalization that's going on right now a good or a bad thing? Was globalization in and of itself a good or a bad thing? I'm sure many publications will be written throughout history talking about this. And so I think, as the Chinese say, we live in very interesting times. I wanted to play a little bit about how the World Economic Forum looks at this, because certainly the WEF has taken center stage, especially since the pandemic, as an agency that is commenting on and actually providing guidance to the rest of the world They bring in a lot of people from around the world and then release that guidance to the world. So it's become sort of a influential, almost not policymaking organization, but influential organization that helps determine what countries are going to do on their policy. Anyway, I thought it very interesting what they said here. Let me go ahead and make sure that we have sound on this, and I'm going to go ahead and play just a couple of minutes of the video. It's very prescient about what's going on in the world, and I point this out to say the issues they're having in the UK are not necessarily wholesale different than the issues they're having in the US, that are not necessarily wholesale different than the issues they're having in Japan, that are not necessarily wholesale different than the issues they're having in Europe, that are not necessarily wholesale different than the issues that they have in Australia, Africa, South America, and the rest of the world. It is the global economy, as I point out here with this special agenda dialogue on the future of the economy. They're going to talk about the odds for recession, where people think this could be going. I'm going to play this just for a couple of 3 minutes, and we're going to get a nice eye chart in here about how the WEF thinks each region is doing. But the one thing that I really want to impress upon you is they're recognizing that the whole world now has come under this pressure. This is no longer just a Lehman thing or a mortgage market thing in the US. We have a much bigger issue that has deeper political and economic roots in history than a lot of people may realize or be willing to admit, especially in the political class, that are now coming to some sort of head. And that's the type of thing that we're really addressing here. And here we go with the presentation.
And welcome to this special agenda dialogue on the future of the global economy. I'm Adrian Monk here at the World Economic Forum in Geneva, Switzerland. Joining us to discuss the global economic outlook are Rima Bhatia from Bahrain. She's with the Gulf Investment Bank. We have Guy Miller from Zurich Insurance in Switzerland. And in Singapore, we have Santi Satyaratai with Sea Limited. Also joining me to discuss this report, the lead on it here in Geneva, Sadia Zahidi. Sadia, thank you. Can you begin perhaps by telling us the headlines from this year's Global Economic Outlook?
Thanks, Adrian. The Chief Economist's Outlook is the views of 50 of the top chief economists from various sectors, various geographies, telling us where the global economy is headed. We do this exercise every few months. The last time we did this was in May 2022, and the headline was that we are in the midst of a perfect storm. Now, here in September, we're looking at a situation that became worse, and the outlook has darkened. So, for example, this time, 70% of our respondents believe that the global economy is headed for a recession within the course of 2022 or sometime in 2023. Now, at the same time, the picture does look different around different parts of the world. And we have to be conscious that what is happening right now in Europe is not quite the picture around the world. Europe is certainly the area in greatest trouble, if you will, when we look at the results of the outlook. So, for example, 9 out of 10 respondents expect growth to be weak or very weak when it comes to Europe. Respondents are marginally less pessimistic when it comes to China, with 67% expecting weak or very weak growth in 2022, with things looking a little better in 23. The United States is the opposite. Things look pretty good at the moment, but there is a sense that growth may be weaker when it comes to 2023. The Middle East and North Africa region looks set to perform particularly well. 7 out of 10 respondents expecting growth, and again, not surprising given where energy prices currently are. In South Asia, generally positive outlook, but the set of people that are expecting a negative outlook has grown from the last time we did this. It was 7% in May. It's 20% this time around. In Central Asia, the set of people that are expecting growth to become weaker has risen again from 20% to 40%. And finally, when it comes to Sub-Saharan Africa and Latin America, the picture is mixed. In Sub-Saharan Africa, now a solid majority, 60%, are expecting a slowdown in growth in 2023, whereas in Latin America, things are looking a little more upbeat, with a solid 56% expecting moderate growth. In addition, there are a number of other trends that get highlighted in this month's Chief Economist's Outlook. Inflation is expected to remain very high, although the outlook is better than it was in May. Real wages, unsurprisingly, will continue to fall and are expected to not keep pace with this rise in prices. Around 9 in 10 expect real wages to decline in low-income economies and 8 in 10 in developing economies. Food and energy crises are continued to remain very large risks. And unsurprisingly, social unrest is expected to continue to rise as the cost of living continues to bite some of the lowest income across developing and developed economy populations.
Nice little summary there from the WEF on that. And if you want the longer report, you can simply Google the World Economic Forum Chief Economist Outlook. It's out in September 2022. They get a little bit deeper into it. I'll just give you the table of contents there that you can kind of see really what they're talking about and what's in that. It's got a whole lot of information if you're interested in kind of studying that. And I won't go through that on this. It may be a little bit too long for this video. The point of it is we haven't solved all the issues from the last couple of economic pullbacks, because we had the dot-com bubble tech crisis in 2000 timeframe, and then 2008, 2009, 2010 timeframe we had the issues with the mortgage market. Those types of issues seem to have rolled up or possibly metastasized or just grown, if you will, into bigger economic issues, not only in the United States but around the world. As the WEF pointed out, lots of issues in less fortunate and developing countries, poor income countries. But certainly we can see from this report, the UK, the US, Japan, those developed first world countries, are coming under pressure as well. And not to leave out China, which has had issues in its property market. We know from the issues that they had with Evergrande and Finnick and some of those other entities as well. The property market's coming under a lot of pressure. So nobody in the world really has been spared from what's going on. Now, each nation may have a different characteristics or attributes to what's going on, depending upon their role in the global economy, where they're a producing nation like China and Germany, or debtor service nations like the US, UK, and much of the rest of Europe. That there may be different issues within the context of what's going on globally, but certainly those issues are interrelated. And the big question is, how will the political leaders address these, and what type of dialogue should we have as the peoples of the world in informing our political leaders really what we want to see, and how are they responding to that, by providing solutions that would seem to make sense. Regardless of what actually happens, I fully expect us to have a fairly deep recession. I mean, if you look at the history of recessions, we're kind of due for one, given the magnitude of the problems, especially in the US, because it's been about 12 years really since we've had one, and the issues in the mortgage market back then are a little bit better, but seem to have spread more broadly to the rest of the debt markets. And it becomes more not only just a corporate issue or an issue with certain types of debt like mortgage debt or auto debt, and it seems to be elevated to a level of a sovereign debt issue as well. So this would be very interesting times, as the Chinese say, and what's going on. I think it's going to be highly informative to us about what works going forward, and just want to make sure that we're certainly part of that conversation and determining what's going to go on. Because at the end of the day, whether you like the political process or not, the political process is how the people and the leaders talk about how we're going to deal with these issues, and certainly we are going to have them going forward. Everybody expects us to, as I've been reporting over the last several articles and now videos on this site, JM Bullion, as well as on Gold Silver Pros, where I do my own research. So just wanted to bring you some thoughts on that. Please go read the article. It'll be out on JM Bullion probably before the time this video gets processed. And it really is a good little piece to help us get thinking about what we would do individually, which is really the big takeaway. For you guys watching the video, you're probably like, okay, what does all this mean to me? Why do I care about what is going on either in the UK or across the world, about World Economic Forum? Or I just have to worry about getting food on the table for my family and going to my job and the daily things. And that's true. That's what we worry about on an everyday basis. That's our job as individuals and as families and as participants in this whole thing. But when it comes to issues of us leading into a recession, the policies that may have affected it, the policy stance, and what we're going to do coming out of it, I want to make sure that we, the people of the world, are being heard and are discussing that, because it's also our responsibility. It's not just hey, leaders, fix all of our problems, we put you in office. It's we need to be part of that solution as well. And we need to make sure that we're engaging with the political process to do that. The other obvious point is this is a precious metals channel. I run a precious metals channel. A lot of what we can do fiscally is do things like get out of debt or just lessen our own debt risk, if you will, exposure to debt in our lives. Of course, try to maximize our incomes as much as possible, live in a way in which is sustainable, especially in a recessionary environment, because recessions come every 4 to 12 years like clockwork. They can be deeper sometimes or lighter sometimes, but they come. And owning precious metals certainly could be a part of that as well in terms of long-term stores of value, and especially gold. Excuse me. I believe people will turn back to gold for safety. There's a lot of gold being brought into central banking system. And then silver, of course, is a bit more speculative asset, which may be a little bit less monetary than it used to be, and probably quite a bit more industrial. So it's got that more speculative aspect to it, depending on how we think industry is going to demand silver. Certainly, I think people who cannot afford gold may buy a lot of silver for monetary or for safety purposes, and that's also going to contribute to the drive in silver. Again, I'm going to end this with the same thing I've been saying, for 10 years. Gold and silver are going to continue to go up until these issues are solved. I don't believe since 2000, we had the tech crisis and the mortgage crisis, 2008, 2009, we've solved the underlying issues. And so the bullish case for precious metals is still intact. And if anything, it is stronger than it was before. And regardless of the price action of the speculators on the COMEX, bidding on what they think gold and silver is going to be on the December contract in a purely paper sense, which is 99.999% of that market most months. Keep in mind that process itself will be informed by the solutions brought about political leaders and the depth and length of the recession itself. So regardless of what precious metal prices are now, that will change as we get deeper into the recession. We have the dialogue going on, the new policies implemented, the things that happen around the world, whether that leads to additional geopolitical conversations and conflict, we'll have to see. All of that, I think, is going to affect how the derivative traders look at gold and silver, and I think that's going to cause gold and silver to rise. And I also think in the longer term, that the introduction of a much more heavily fiscally traded market in Shanghai, which is starting to gain a lot of ground on the world stage in terms of a competing alternative, if you will, or in its own right, a very strong sovereign market of a rising nation, commodities market of a rising nation, will have more effect on the prices as well. So there are going to be a lot of things that contribute to the long-term outlook for the precious metals prices, maybe that we're not seeing in the charts right now. But if you understand them, really helps us to understand where the precious metals, specifically gold and silver, will be positioned, and commodities will be positioned going forward from an investment standpoint and from a saving standpoint and a wealth preservation standpoint. So just wanted to point that out, that despite where we may be in the precious metals now, and they haven't immediately responded to what's going on, they will. A lot of that's determined by short-term thinking derivative speculators against the longer-term issues in the world that we tend to see. The short-term speculators on the COMEX will, quote unquote, get religion when they see the effects of what's going on in the economies, and they will flip the script there as well to bid on the precious metals where they think that they're going. And I even think we'll get into a mania phase there, where you see big variations in the daily prices up and down of the precious metals as the derivative markets on short-term contracts try to determine what's going to happen next. And just remember, that is a short-term speculative process that's determining the current daily spot price, but it does not control necessarily the long-term trend of gold and silver in the marketplace, because all the factors that argue in favor of gold and silver will become apparent to everybody trading the short-term derivative markets, and they are going to start making changes to the way that they see those. So for those of you waiting for precious metals to rise, we know we have strong physical demand. We know we have some shortages on certain products. We know world output of silver from the mines is not enough to make up for the demand. We know that those factors are very bullish. My personal opinion is don't get discouraged right now, because sometimes those derivative markets don't do a good job of looking at the longer term picture, and they don't do a good job of looking at the physical supply and demand characteristics of the market itself. And that kind of explains why spot price is not always realistic. And we've had this big explosion in premiums on the retail side, because retail is demanding precious metals right and left. Companies are demanding silver right and left for industrial purposes, but the derivative markets are not bidding that up yet. It's because they don't have that focus. The derivative market players are not necessarily always the players in supply and demand. Some of them are producer merchants, certainly. A lot of them are not. So a lot of players in those markets that don't get concerned with physical until they have to get concerned with physical because the shortage issue is right in their face. And what's going to exacerbate the shortage issue? The issues going on with the world economy, which is going to cause a flood of sector rotation of dollars, pounds, yen, yuan, so on and so forth into the precious metal sector and a flight to safety, which I think is still coming up. All right, I think that's going to do it for today. Thank you for tuning in to the JM Bullion channel. I am your host, Robert Kientz. I appreciate you guys coming over to the channel. We're trying to build up YouTube here at JM Bullion just a little bit. We'd love for you guys to come and take a look at the content that we have. And hopefully you guys like the content and will return in the future. And of course, we will do this twice a week, every week, all year round for you guys, looking at what's going on, how that might affect the precious metals, and really boiling it down to what you need to concern yourself with, hopefully, in maybe a 20-minute presentation that helps you guys out, a consolidated presentation that brings you the research and helps you make decisions for your financial future. Hopefully, we hope that you find this valuable and feel that this has been valuable information. All right, until next time, this is Rob Kientz of Gold Silver Pros on behalf of JM Bullion. Thank you.